Well, hello, welcome everyone to this video blog about crypto. It's all in the news, it's all the rage. You have athletes talking about it, you have stars talking about it, you have your friends and neighbors talking about it. So we're going to talk about it. Doesn't mean it's good, bad, or indifferent, but we do want to educate a little bit, dispel some of the myths or rumors. I'm joined by Eric Stein from East Bay Investment Solutions. Eric, thanks for being here today.
Thanks for having me, Brian.
Absolutely. So we're going to jump right in. I'm going to let Eric take over, talk about what this Bitcoin thing or crypto is, what it maybe not be, and I'll jump in and ask some questions as you go along.
Yeah, so the first question we always get is, why are we talking about cryptocurrency? And this chart tells a lot of the story. This chart's actually the price of Bitcoin going back several months to current time. You can see it's pretty volatile, but you can see at some point Bitcoin has been worth north of 60,000. It's currently worth about 45,000 ish. But you can see it's been quite volatile, but it's also been significantly higher than it was historically. If this went back many years, it would have been significantly below where it was. So you're seeing stories about people that are, allegedly or arguably making lots of money in cryptocurrency and in Bitcoin in particular. So there's a lot of excitement, and sort of that fear of missing out is sort of driving that price higher in some cases. People just want to be involved in it. They want to have a stake in it. They want to be part of it.
Gotcha. So what is Bitcoin? Is it is it a currency? Is it an asset? Do people have to pay taxes on it? And I guess I should say all crypto. So what is it for people who don't even know what it is?
Yeah, it's a good question. It is technically a cryptocurrency, and there's many other cryptocurrencies like Bitcoin. So the question is Bitcoin the cryptocurrency you should be invested in, or should you be invested in any of the other cryptocurrencies that exist? From our perspective, if you think about a stock or a bond, there's a way to value a cryptocurrency, or you can value the stock or the bond. With cryptocurrency, it's not exactly the same. We don't have a way to value it, so we don't really know what it's worth. So going back to this chart, should Bitcoin be worth 45,000 or should it be worth 60,000? We really don't know because there's no real way to value it the same way there is with stocks and bonds. So it's very difficult from that perspective. We would consider it more speculative, again, just because we don't know. The other aspect about Bitcoin and cryptocurrencies in general is it's not regulated. It's sort of outside of the traditional banking system, which some people like, but that's certainly a case for us as fiduciaries. It's very difficult for us to be recommending things that have no regulation. So it's worth $45,000 today in terms of Bitcoin. What if it's worth $10 tomorrow? It's hard from a fiduciary perspective, again, because we can't value it and because it's not regulated. It's not something that we would traditionally recommend as an investment outside of just pure speculation.
So I want to jump in there, regulation, because one of the things that I hear is because it's not regulated, people like it, they flock to it, whether it's for good reasons or bad reasons, right? So we could have good intents, bad intents, but what would happen potentially if there were regulation? Would you have pressure upward, downward? How would you anticipate that, or do we have any way of knowing?
It's very difficult to really tell. On one hand, the fact that it's unregulated actually attracts a certain element to cryptocurrencies and Bitcoin, which would then arguably go away if it's regulated. On the flip side, if it's regulated, there might be more people that actually do see it as an investment potentially because there is more regulation. They might feel more comfortable. That might drive up the price pressure. It might be temporary. Again, we don't know whether it's permanent or not, but that regulation, in some respects, could be good, and it might have other unintended consequences as well.
So what does the IRS say if somebody happened to win the lottery and make a bunch of money on Bitcoin or any of these? Is it free?
Well, that's what's interesting about cryptocurrency. I'm not a tax professional, so I'll hesitate to give tax advice. But cryptocurrency, even though it has the name currency in its name, it's actually treated by the IRS, as far as I'm aware, as property. It's not actually treated as currency. So that means that you actually have capital gains associated with cryptocurrency. So if you bought it really cheaply and it goes to become much more expensive and you go to sell it, you are supposed to pay capital gains taxes on that gain.
So it's not all free.
It's not all free.
Gotcha. Gotcha. So it's beyond the scope of here today, but there are these other things called tokens or non-fungible tokens and blockchain. So just real briefly, how does that play into this?
So they're somewhat related, but all somewhat different. So you've got your non-fungible tokens, which are really sort of a unique digital code. It's usually some piece of we'll call it internet art, for example, that people can buy. what's interesting is you can putting all those concepts together. You can actually buy an NFT using cryptocurrency, and the transaction is captured on the blockchain, which is sort of a public database of those transactions. So again, they're all somewhat related, but very different at the same time.
Man, my head's kind of spinning. So we got the crypto, which is Bitcoin. We got the piece of art we bought, which was a token or non-fungible token, and then we have blockchain, which verified all of it.
Correct. Yeah.
Okay.
Yeah.
So it sounds like a lot of technology that we're still working through, and some of the maybe some of the likings of what we saw in the late '90s with the internet coming of age, and a lot of companies failing, and a lot of companies succeeding, but we not knowing, right?
There's going to be some winners and losers in all of this, whether it's NFTs, non-fungible tokens, or cryptocurrency or blockchain. There's going to be things that we're going to see in the future, and they're going to see things that we're going to see fail, and we probably won't see succeed. So it really does depend on what you're looking at. And again, from a cryptocurrency perspective, there's so many different cryptocurrencies out there right now. It's very difficult for us to tell which one is going to be out here in 5 or 10 years and which ones won't be.
So I think what we would say to people is be careful. You're playing with fire right now. That fire could be a successful fire or a bad fire, right? But you're probably playing with some type of fire or speculative. And so we just want to walk with caution.
Correct.
Yeah. Awesome. Well, thanks for being here. And thanks everyone for joining us for this video blog. Certainly, I know there's lots of questions out there. If you have questions about crypto or anything like that, please give us a call. But I do want to emphasize this is not a recommendation to use, buy, sell, trade anything with crypto. It's a very complicated tool. There's a lot of moving parts, and at best is speculative currently. If you got questions, please reach out to us. Until we see you again, take care.